Hey guys, it is Julie here with TipRanks, and today we're taking a look at 3 strong buy clean energy stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at 3 companies that have a focus on clean, green, renewable energy, and they come in with a strong buy consensus from Wall Street. So we're going to take a look at these companies, what it is that they do, and what those analysts are predicting for the stock's future. Just before we get into all of that, this is your reminder to make sure you've downloaded the TipRanks mobile app so you can access all of your favorite investment research tools on the go. Links are in the description down below. Let's get right into our 3 clean green energy stocks. First up, we're going to take a look at a company called Clearway Energy. Their stock trades under the ticker CWEN, currently priced at $27.67. Over the past year, they are down 2.6%, but have been climbing back recently, gaining 27% in the last 3 months. Clearway Energy is one of the largest renewable energy owners in the United States, with approximately 6,200 net megawatts of installed wind, solar, and battery energy storage systems. They own a portfolio of contracted, renewable, and conventional generation, as well as thermal infrastructure assets, which provide steam, hot and chilled water, as well as in some instances electricity, to commercial businesses, universities, hospitals, and government units. Clearway also endeavors to provide its investors with a growing and stable dividend, and their current quarterly dividend comes in at 41 cents per share for an attractive dividend yield of 5.61%. The company is targeting annual dividend growth of 5 to 8% throughout 2026. Back on May 9th, they did share their Q1 earnings report, where they came out with a much narrower than expected loss per share and also reaffirmed their 2024 guidance. For their Q1, they reported revenue of $263 million, which did slightly miss expectations, but their loss per share of just 2 cents was notably better than anticipated. They also shared that they had entered into a new resource adequacy contract for Marsh Landing and Walnut Creek, and their CEO said that they remain well positioned to achieve their 2024 financial objectives, that they reported solid first quarter results, highlighting the benefits of their fleet's geographic and technological diversification. And following that Q1 earnings report, we've had a handful of analysts reiterate their price targets and weigh in. One of those analysts is from Roth MKM, and they increased their price target, citing a Q1 beat in the company's cash available for distribution, stating that the company appears on track to allocate remaining thermal proceeds by the end of 2024. They added that Clearway Energy Management improved visibility into growth beyond 2026 by securing additional 2027 to 2030 RA contracts for their natural gas assets. The Clearway Energy stock does currently come in as a strong buy, with 7 current analyst ratings, breaking down to 6 buys and 1 hold. And the average price target of $31 per share would imply an upside potential just over 12%. Looking at those recent ratings, on the low end we do have a hold here with a downside of 6.7%, several price targets coming in at 7.6%, and a high-end price target from Oppenheimer with an upside of 32%. Our second clean energy company is Boralex. This Canadian company trades under the ticker BLX on the Toronto Stock Exchange, currently priced at $34.70 Canadian. Over the past year, they are down 7.7%, but have also been climbing back recently, gaining 20% in the last 3 months. Boralex is involved in the development, construction, and operation of renewable energy power facilities. They control a portfolio of electricity-producing plants that utilize wind, hydroelectric, thermal, and solar fuel sources. Most of Boralex's plants rely on wind power, while a significant number also employ hydroelectric power. They generate the vast majority of their revenue from the sale of energy through long-term contracts to customers in Canada, France, and the United States. Just a couple of weeks ago, the company announced that they secured financing for a major UK wind farm. This Limekiln wind farm in Scotland is their largest European project, with a combined investment of £130 million from NatWest and EDC. The wind farm is set to operate by the end of 2024 and will feature 24 turbines and aim to deliver multiple local benefits. Boralex does also pay a quarterly dividend, currently at 17 cents per share, for a dividend yield of 1.91%. They shared their Q1 earnings report on May 15th, where the company did come out with an earnings beat and saw some big year-over-year gains. For their first quarter, they reported revenue of $268 million, which outpaced analyst expectations, and earnings per share of 53 cents beat estimates by 5 cents per share. The company announced a substantial 62% increase in their net earnings and continued disciplined development of highly promising projects. Net earnings came in at $73 million, which was up $28 million from the year ago, and their EBITDA of $195 million grew $28 million, which can be attributed to their higher wind farm production in North America, the contribution of new facilities commissioned, and their strategy to optimize electricity selling prices in France. The Boralex stock currently has 8 analyst ratings, coming in as a strong buy with 7 buys and 1 hold. Analyst average price target comes in at $39.25 for an upside potential of over 13%. And looking at our most recent ratings here down below, our low-end price target is a hold here from RBC Capital with an upside of 3.7%. Our most recent rating coming from National Bank is our high-end price target with an upside of nearly 24%. And third on our list today is a well-known name in the clean energy world. That is Brokfield Renewable Partners. Their stock trades under the ticker BEP, currently priced at $27.72 per share. They've also fallen overall in the past year, down 7%, but have also been climbing back in the last 3 months, gaining 25%. Brokfield Renewable Partners owns a large portfolio of renewable energy producing facilities. In fact, they operate one of the world's largest publicly traded platforms for renewable power and decarbonization solutions. Their diversified portfolio consists of hydroelectric, wind, solar, distributed energy, and sustainable solutions across 5 continents. Brokfield is committed to expanding their already large portfolio as well, and just last week announced a big acquisition. The company is set to acquire over 50% of Neon, a top global renewable energy firm, with plans to then make a cash tender offer for the remaining shares. The acquisition underscores Brokfield's commitment to expanding its energy portfolio and supporting the ongoing demand for clean power. And like our other 2 companies today, Brokfield Renewable Partners also pays a quarterly dividend. Their current quarterly dividend is 35 cents per share for a dividend yield of 4.94%. They shared their Q1 earnings report back on May 3rd. Now, while their earnings per share was wider than anticipated, their funds from operations and revenue both came in with a beat. They reported a Q1 loss per share of 23 cents, which was 9 cents wider than anticipated, but their funds from operations came in at 45 cents, which was an 8% increase compared to the year prior. Revenue of $1.49 billion also beat by $60 million. Just a couple of weeks ago, an analyst from DBS increased their price target on the stock. They said that Brokfield Renewable Partners is one of the largest pure-play renewable energy companies globally, boasting a diverse portfolio and a substantial 20-year track record. Their financial robustness is evidenced by its deep capital reserves, including $4 billion in available liquidity and significant partner capital. Overall, the stock comes in as a strong buy with 8 current analyst ratings, breaking down to 6 buys and 2 holds. And the average price target comes in at $30.24 for an upside potential of nearly 9%. Looking at our recent ratings, on the low end, we do have a hold with a downside of 2.84%, and a high-end price target does come from DVS here with an upside of nearly 19%. So that is a quick look at 3 strong buy clean energy stocks. Let me know your thoughts on these companies in the comments down below and what other clean energy stocks you love. I know there's a lot of great options out there, and I always love hearing from you guys. Of course, keep in mind these videos are never a suggestion to buy or sell any specific stock, so please make sure you always stick to your own investment plan. Thank you guys so much for watching. I hope you have a great day, and I'll see you back here next time.